Hello everybody, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion on the local, national, and global economy and how it impacts your personal financial health and wealth. Now here's Taking Stock, episode number 67 with Art Jarvis. And so once again, welcome Art to episode number 67.
Yeah, Chuck, how are you?
I am well. I don't want to steal your line, but I'm doing well. Thank you very much, despite the return to a little bit of cold weather. But so, how are you, sir?
I'm fantastic.
There it is.
Thanks for asking.
Well, you know, and I'm happy to hear that. I'm sure the listeners are happy to hear that too. I know the last week's been a little bit of a bump in the, for the Art Jarvis health and wellness game.
Yeah.
Kind of a bump in the road.
Nothing serious.
So,
yeah.
Well, you're here. You look good.
Well, thanks.
Hope you feel good.
Well, usually I don't look good, so that's maybe it actually there's an improvement in last week. I don't mean it that way. we'll leave it at that. I just mean you look good. You look good. You got color. You got some color. Yeah, I'm not looking peaky.
I'm not going to say open your mouth wide and stick out your tongue. So that's for the doctors to do. Which and I won't give away any discussion about whether there were doctors involved in recovery or whatever. But hopefully you're feeling better than you did a week ago.
Yeah,
that's all.
Thank you. Appreciate it.
That's good enough.
Doing good. Doing good.
And it's a bummer because we had a couple of really nice days while you were feeling kind of crampy. So I'm sorry to hear that.
Yeah, there was one day it was like 70 degrees. It was beautiful outside.
I went outside and played. You know that.
It's amazing what a little sunshine will do for you. I mean, it's cold out there today, but we got some sunshine. So
Studio A has a window. We can look out the window. We have a view outside of Studio A that says the sun is shining.
Yeah. Don't get me wrong, I'm ready for spring. I'm definitely ready for spring. So,
well, I don't know how big our audience will be for episode number 67, but I'm going to share this with whoever the audience is, as I've been sharing it with friends and everybody. We had a little bit of snow Sunday. Today, by the way, for everybody that's interested, today is Tuesday as we sit and record this in Studio A. It is Tuesday, February the 24th. So on Sunday, the 22nd, we had a little bit of, snow, and the cold weather returned, and people were lamenting as the snow fell. And I said, this is nothing compared to what we're going to get.
Yeah.
And they're like, well, no, I heard they're... I said, I'm not talking about the blizzard out on the East Coast right now or something that we're going to get like later today or Monday or even as we sit here on Tuesday. No, we are going to get hammered. One good snowstorm in March.
You think so?
Yes, and you can blame Major League Baseball for it. I'm saying it exactly because they have lost their minds. Opening day for Major League Baseball, in case you were unaware of it, I don't know how you could be unaware of it living in Cincinnati, the home of the Reds, professional baseball's first team.
Yes.
And the traditional Major League opener, although that's kind of fallen by the wayside.
Mess with that.
March 25th.
Really?
The earliest ever in the history of Major League Baseball opening day date, March 25th. So mark my words, snow, big time, coming in March, late March even.
Yeah, that's a tough bet there because we live in Cincinnati. It could be 20 degrees or it could be 80 degrees. So we'll have to wait and see on that one. But I don't disagree with you. There's always a good possibility of a nice snowstorm in March, though. So.
Well, now that we've taken stock of the weather.
Well, let's get to the important part, though.
Yes, sir.
Okay. The first sign of spring in Loveland.
Oh, here it is.
Is coming up.
Here it is.
Right. Correct me if I'm wrong, but if I'm not mistaken, at 2:00 on Friday afternoon is the seasonal opening of the Loveland Dairy Whip.
Being heavily promoted on Loveland Beacon, by the way.
I saw that. I did see that.
So did you get to listen to the podcast?
I did not get to
with
listen
Luke Wiley. Well, Luke is, of course, the new owner last year, his first year. So he's getting into his second year as the owner of the LDW. Give it a listen. And for you guys listening now that haven't heard it, go to lovelandbeacon.com, find the story on the Loveland Dairy Whip and listen in to Luke Wiley and the excitement and energy behind the coming opening day, because it is opening day in Loveland on this Friday, whatever that is, the 26th, 27th? 27th.
27th.
Yeah, 27th. Thing. So Friday the 27th, Loveland Dairy Whip opens, 2 p.m. Be there.
I'll see you there.
I know you will. The
my
entire staff of the Jarvis.
That's right. It's tradition. You got the Jarvis Global staff has to get.
I'm not going to talk to you
get
guys.
ice cream.
I'm not going to take your picture. I'm not going to talk to you.
That's fine.
People say that I give you too much time.
That's fine. I'm good with that. I just wanted to get my ice cream and enjoy it. It's turned into something. It's turned into something that's not really what it is. Let's put it that way.
Okay.
You know, everybody makes a comment that I'm always the first one to get the first cone every year, and that may have been true like maybe 2 years in the last 15. But I can't compete with those Loveland Valentine ladies. They set up early, and I've made it a personal policy not to mess with the Loveland Valentine ladies. So I'm happy to take second, back seat to them. So yeah,
they have a plan.
They do have a plan, and they look good doing it too.
God bless them. Chuck Gibson here at Loveland Beacon has been informed of the Loveland Valentine ladies' plan for their arrival, along with opening day at the Loveland Dairy Whip.
Yeah.
I have to say though, here we are, a couple of minutes into our episode, still taking stock of things that are. Well, you know what? Loveland Dairy Whip's going to make some money, and you're going to spend some money. So we're taking stock. We're taking stock. The question, really, for everybody listening, how much money are you going to spend at the Loveland Dairy Whip this Dairy Whip season? February 27th through the last Sunday of September.
Yeah.
Put that down in your books. Keep it on your spreadsheets or your, what is that? Whatever app you're using. I'm not going to name any apps because I'm not here to promote apps. But whatever app you're using to track all that thing, check it at the end of September. See how you did on your Loveland Dairy Whip spending.
Yeah, the answer is more than I should, but not enough. So there you go.
Well, if you're Luke Wiley, you'll be not enough. And if you're us, it'll be more than I should.
Yeah. I'll have to listen to the podcast. I'm interested to see if there's something new this year. So. Because last year he came up with the Loveland Frog Sunday or whatever he called it, so that was kind of neat. So let's see if he's got something.
You're going to have to listen. I'm not giving it away on this.
I'll make it a point
on this episode number 67 of Taking Stock with Art Jarvis. You will not hear what the newest thing is that's coming at the Loveland Dairy Whip, but there is something new coming.
There you go.
You're not wrong to suspect that.
Good.
So
Fantastic.
I'm getting ready as we sit here for the listeners. They can't see it, but I have the studio control board in front of me. I'm getting ready to push the button for Pink Floyd's "Money." To remind us, money.
Money, yeah. Right.
Money.
For any people,
I'm not going to sing it. Thank you.
We're going to talk about stocks for the people who are still listening.
Don't give up. Oh, wait a minute. What? Let's see. It says. A bi-weekly discussion on the local, national, and global economy.
There you go.
Well, there's nothing wrong with talking about the local economy first, and a stalwart in the Loveland local economy is the Loveland Dairy Whip.
Yeah, it's been around for 70-something years?
Coming up on 70.
Yeah. Okay.
It's not 70 yet.
Yeah, almost, because it started in the 50s,
Or maybe it's 70 last year, and this is 71. I forget.
Okay, gotcha. It's been around
1955.
Yeah.
70 years was 19.
It's one of those what I call a jewel of Loveland.
It is 70 plus years at this point.
Good.
I lost track.
All right. Well, anyway, sure sign of spring. And you're welcome, Loveland Dairy Whip, for the plug.
Luke paid his bill.
Good.
It's all taken care of.
Now I just got to give him the answer to the phone.
Ladies and gentlemen, the previous 3 minutes here on Loveland,
brought to you
on Taking Stock episode number 67, was brought to you by the Loveland Dairy Whip, and it is a paid advertisement.
There you go. I'm not sure I knew that.
We may have just made that up.
Yeah, right.
But we'll consider it a paid advertisement. And so thank you to Loveland Dairy Whip for helping bring this edition of taking stock. And now let's hit the money button
There you go.
on the control board. And Art, before we started, I was like, I got all these different things for us to talk about today. And of course, we just ran off a whole bunch of time. We should have been talking about one of those things at least. I want to, you got me very interested when we were talking offline before the recorder started about this, what do you call it?
The pennant formation?
But starting with, you said, I want people, what Art Jarvis said is the market appears a little tired right now. So let's start there.
Yeah, I mean, it's just this year, we really, the market, we're up a pretty good clip today, but basically we bounced around a little bit here and there, and we really haven't done anything. From an S&P 500 standpoint, we did the Dow Jones did hit 50,000 and things like that, so not that I'm really worried about the Dow Jones. But no, it just feels, again, it's been doing this for a while, and it just kind of feels like, this market just feels tired. It feels directionless and things like that. But what has happened, and again, this is what's, kind of technical, using technicals for investing purposes. And a lot of times you use like charting and things like that to try and help you maybe determine an entrance and an exit point and things like that. Well, there's what's known as a pennant formation. It's called that because it looks like a baseball pennant or something like that, where the market basically trades sideways, doesn't go anywhere. The lows get higher, and you just keep bouncing off the same level on the top side. So, which is kind of, we've taken a couple shots at 7,000, but what has happened is we've basically traded sideways and traded ourselves into a corner. And typically, what happens is you end up with an explosive move one way or the other when it finally busts out of that pennant formation.
Well, just for the listeners. So if you think of your sports team's pennant with the long side, I mean it's a long triangle,
very long.
So we've gone from that long side and just worked it, and we'll call that top side of the pennant. The top side, and it's bouncing off of that, and it keeps leading to that pointed end, which you call when the market gets there is when there's typically some sort of an explosive move.
Right.
All right, so hopefully that helped paint a picture for the listeners.
Definitely. Again, this is not you do not use this as a 100% investment strategy.
Well, this isn't a graph, a line on the graph going up, down, whatever.
Yeah.
This is, if you think of a shape of a pennant, and it's getting to that point.
And it's a healthy thing. I mean, we had two, from an S&P 500 standpoint, the last couple of years have been very good. Double digits, 15, 16, 17% returns. So it's kind of been a little bit of a cooling off period, which is not a bad thing. A cooling off period is good. And, you're just kind of getting to that point. It's like, okay, we've created a base. We've created some consolidation in the markets. And now, okay, what's the new plan? Right, and if you sit here and I look at earnings numbers, I look at interest rates, I look at all the economic, inflation and unemployment, all those things that we look at. You have to kind of say, okay, so let's say we are going to get a big move in the markets. Is it a bigger possibility that it would be a positive move, or a bigger possibility to be a negative move? Well, at this moment in time, with the information we have, I would say that the higher probability is that it should be a positive move. Now, there's always stuff going on in the world. I mean, the new thing is Mexico, right? I mean, you got all kinds of stuff going on down there, and the question is it even trickled over maybe just a little bit into like San Diego. I think there was some stuff going on in San Diego, but it's what is the longer term impact of that, and it's uncertainty. Right, we all know it's like, okay, that's a little bit something new. What does that mean? But in the end, does it mean a lot? No, not really. So,
well, again, and a reminder, because to me it was sort of striking. In my mind, I would say, who would have thought that the death of a cartel leader at the hands of, we'll say, some sort of, the military. So military enforcement, not law enforcement, so to speak.
Yeah.
But at the hands of a military uprising, a cartel leader is killed, and it results in, chaos and rioting in the street.
Yeah.
Death. Chuck's line is death and destruction.
Yeah.
I mean, I don't get that, and then the impact that it could have that you're talking about. That's just, that's out there.
Apparently, the cartel members, they had a better plan than maybe the government did. They're being very strategic about what they're doing. They're very strategic about what they're targeting and who they're targeting and things like that. I don't think that they met Sunday night or whatever that was and said, hey, how about we do this? But it's also kind of curious to me that was there, okay, so we're going to take out or potentially take out the main cartel leader down there.
Right.
Do we have a plan for what happens after that?
What's next?
Yeah, because it's not going to. Again, I don't live in Puerto Vallarta, but
right.
Yeah, but the reaction is not going to be positive. So do we have a plan for that? So I don't know. We'll see where that shakes out. But I know there's some Americans, some very close to me actually down in Mexico right now. So not in Puerto Vallarta, but yeah. So it's it's a thing, and depending on where you are in the country, it's not a big deal, or it's a little serious. So
a little bit scary.
But the point of that whole thing is there's stuff going on. But if I'm looking at the markets, I'm looking at where we are from an interest rate standpoint and from a corporate earnings standpoint, things like that. I'm still positive. Okay, so I think this might be an opportunity for us to, and maybe today's the beginning of that. We're up 0.8% on the S&P 500 today. Maybe that's the beginning of that move, that pop up. So, and we've hit 7,000 2 or 3 times, right?
Sure.
So that's kind of your resistance level.
It appears that's the case.
So if we pop,
we didn't hit 7,000, and then next week Art said, you know what, we may see 7,500 or so. It didn't look like it was going to go through it.
Yeah, I'm still positive about the year, but yeah, it's so you have 2 things going on. You have a resistance level. Just call it 7,000.
Okay.
But you also have this pennant formation forming at the same spot. So if we get a move up where it busts to the positive side out of that pennant formation and busts through that resistance level at 7,000, to me, that would indicate a very strong move up. So that's a whole lot of technicals that we don't normally talk about on this show. But it's just a little bit different flavor of some of the things we look at and everything.
Well, for me, again, I was very interested because it came up, you and I talking before we turned on recorders and began the show. And I got interested in, what that move would be. And again, the best news was there is nothing happening, sans Mexico. And I don't think that either one of us forecast that to have that big of an impact. Okay. Ultimately, like on the global economy. But aside from that, there is nothing happening that brings that. I got to think of what that uncertainty, that high level of uncertainty that could cause it to be. The big explosion would be a downward trend, right, as opposed to an explosive move downward or an explosive move upward. So I think the good news from that scary description of where, the market's tired. That could have scared some people that were listening. Oh, what do you mean the market's tired? Well, we're going to see something, and all the indicators right now say it's more likely that we're going to see a positive move as opposed to an explosive negative move.
With the normal caveat of, well, somebody does something stupid. So, which I've been told, quit saying the word stupid, but, that's kind of, it's, if someone out in the world...
we hear that same word.
Yeah, I'll probably keep using it. But, you still have tariffs, you still have Russia and Ukraine, it just entered its 4th year. There's still stuff going on out there that you need to pay attention to. We've got, with the whole thing that happened with tariffs here this week in the Supreme Court, The whole European Union, where they were supposed to vote on some of the trade, they put it on the back burner because they didn't vote on it because of what happened with the Supreme Court and comments made by our administration. So.
Well, you touched on that T word, tariffs. We could certainly spend some time on that. I don't want to get heavily into that because probably in 2 weeks we'll have more information, more facts about what has happened with the tariffs. But I guess again, you can say, hey, there was a day Friday, this past Friday, the Supreme Court made that ruling. Everybody likes to say that ruling against Trump. Well, okay, they ruled that the law stated this and it went against Trump's plan.
Right.
But I wouldn't call it a ruling against Trump. That's just the way this world's divided by it.
Right.
But nonetheless, there was a Supreme Court ruling Friday that was not the ruling that the current presidential administration was looking for in terms of the tariffs and how we work toward balanced trade with world trade partners. So, I do want to give you a chance to say something about that.
Well, we talked a little bit offline. It's just, tariffs are not a new thing, okay? This isn't, we talk a lot more about it these days, but, tariffs have been going on for a long time, and tariffs aren't necessarily a bad thing, because guess what? Every other country in the world has tariffs, one way or the other, so it's not necessarily a bad thing.
We're paying tariffs.
Well, and again, I personally feel, and I think the numbers in many cases support it, that we have been on the shorter stick of the end on tariffs and things for the last couple 20, 30 years.
Right.
So
well, when I said we're paying tariffs, so as an exporter in the world trade, the U.S. is paying tariffs.
Sure.
U.S.
100%.
Right, and as opposed to receiving tariffs, getting to what your point right now that you're going toward.
But you're working toward more of a balanced trade, right? And you want some equity and some, and the interesting thing, and again, we don't get in too deep about it. But you look at all the drama we've had for almost a whole year now.
Right.
Last year the trade deficit was $900 billion. Okay.
Right.
Guess what? The year before that was basically $900 billion. So it's the difference between the 2024 and the 2025 trade deficit was negligible after all that went on.
The positive aspect that I take from that piece of news, which is surprising to me, as we said when we were talking offline, the positive aspect of that is for everybody out there, the phone lines in Studio A are not supposed to be open. But anyway. But for everybody out there regarding the tariffs and the tariff discussion, and I don't care which side of the fence you're on, that piece of news, that information, it went from 900 billion to 900 billion. Negligible change, it's still in the same area. Our debt, right? Or our deficit, I should say, not our debt, our deficit spending. Well, so calm down.
Yeah.
The tariffs didn't mean that much.
Right. And don't forget the difference between
That's the positive.
Our imports and exports. That is about 6% of our gross domestic product. Okay, so it's there.
Right.
Keep an eye on it. But I'm more worried about the 70% that the consumer's spending, to be honest with you. We want to keep the consumer in it.
Yeah, which is why that is one of the key economic indicators you talk about on this show. Is that, what's the consumer spending index or whatever.
Yeah, you lose the consumer, you have a problem.
There it is. You said 6%. So when you said percent, that reminded me earlier. So a quote from my lovely bride, as we were talking about, like today it seems the market's rebounding again. The roller coaster ride. Because yesterday it lost about 1%.
Yep, sure did.
That's the quote from Sue. It lost about 1%.
Sue.
1%. Come on. But she was saying that. Here's why. The tone of that. It lost 1%.
Right.
That's the tone from My Lovely Bride, because she was seeing it broadcast on the news with doomsday. Right. The markets were all down. S&P lost nearly 1%. Oh, NASDAQ nearly 1%. And, you know, your favorite, the Dow Jones Industrials, actually lost a little bit more than 1%. But, well, like 1.2 or 1.1. I think it was actually 1.1%. And so Sue said it lost about 1%.
Right. She didn't change whether you guys are having hot dogs or steak for dinner. Yeah.
Not yesterday. It was leftovers anyway.
You know, we live in a world where, honestly, if you have a very strong market and all of a sudden you have a 5 to 10% pullback, that's generally kind of a healthy thing. Because I think we mentioned it last episode that, you know, sometimes you need to burn off the weak ones. You need to get rid of the people who are not in it for the long haul and those who get nervous and things like that. So sometimes it's a good thing to kind of get rid of the, I'll use the word weak ones again, you know, because then when that makes for a healthier market, and then we can get back on task and move up to the next level, right? So, and then invariably,
strengthen the market.
They will get out at the bottom. And then when the market shoots up and we start hitting new highs, it starts to get back in again. It's like, geez, you know, it's completely opposite of what you're supposed to be doing. But
something about buy low, sell high.
Yeah, well,
how come they always sell when it's bottoming out?
Because people don't like pain, and you can generally see the capitulation in the markets.
Feel the pain.
And then they start feeling the pain that I'm missing out on something.
Feel the pain.
So there was a study done years ago, and I don't know if it still completely holds true, but you know, I always talk, you know, I think the average equity mutual fund did like 8%. It did 8% over a certain period of time. The average investor made like 2%. The average. Okay, and that's because they're getting in at the wrong time, getting out at the wrong time, and they're just doing things exactly opposite of what they're supposed to be doing.
Wow.
So,
this past year I was clearly above average as an investor because I did way better than 2%.
I hope so.
Well, you know, which brings us, we're coming quickly to the close of our episode number 67. Taking stock with Art Jarvis from Jarvis Global Investments, and truly, I have to say, of Jarvis Global Investments, who truly is the sponsor behind Taking Stock with Art Jarvis. So, thank you.
I'm happy to sponsor myself.
God bless you. Well, you know, nobody else would.
You know, I'll give myself a little bit of a shameless plug, but this is 2026 is the 20th year for the actual Jarvis Global Investments.
Congratulations!
Thank you.
I've seen that. I've seen some of the promotion.
Yeah, it's starting to pop up, and you know, my marketing department, Caitlin, is working on some things just to kind of say.
Well, I'm not going to say you have a huge marketing department.
I'm not sure we have a huge anything. So, but
for obvious reasons.
Yeah. Oh, yeah.
Well,
right,
Kate, you know what?
Bad policy.
Pat on the back for Caitlin. She does a nice job.
Yeah, Caitlin and Austin both do a good job. So
I'm talking about the marketing.
Oh yeah, no, she's because guess what? Art's not doing it. So, but no, we're pleased. It's nice. It's nice to say that you've been doing it for whatever I'm in my 39th year, I guess. But the firm has actually been around for 20 years, and in spite of me, it's actually been working out okay. So I'm happy about that. So yeah,
that's what your clients want to hear. Well, we're really getting to the end, but I wanted to throw this out there. If the market's a little tired and cooling down's not a bad thing, and you know, it's all okay. Everything is okay. Take a deep breath, let it out. But then, where do you find? And we talked about this a little offline, so I'm cheating because I know some of your answer. But where do people look to see that that stronger market that's growing and getting stronger right now? And I know the answer is the international market is the one where it might be the one that's going to ride out to
Yeah, that's been the nice thing. We started to transition. We gave certain sectors haircuts and things like that starting late last year. It took a little bit out of the technology sector, took a little bit out of industrials. Kind of took those positions back to more what, quotation mark, more what I would call a normal position because they've been so strong for so long. But we started moving some of the funds into higher dividend yielding stocks and into international stocks. And, let's just say before today, the S&P 500 was flat. But more interesting, number one, if you look at the S&P 500 unweighted index, it was actually up about 5%. So we talk about that broader-based move up in the market. It's nice to see some other sectors actually participating other than technology. But even more important, which has been great for the portfolios for the first 2 months of this year, is the international markets. They're up 10%. So the S&P 500 is basically flat, and then you've got 20% of the portfolios that are up 10%. So it's been a good thing so far. And again, albeit we're 2 months into the year. We got a few more months to go, but so far so good.
Yeah.
So
well, we're gonna get some more information apparently tonight. Tune in 9 p.m. Eastern. President Donald Trump is going to give the State of the Union address, and so in 2 weeks from now, we will have been able to have digested that, right? I saw that.
Yeah.
The listeners didn't see it. Yeah. But we'll all of us, listeners, you, me, we will be able to digest every little morsel of that State of the Union address. How good it was, how bad it was, and how good or how badly we reacted to it. Because we've already heard all day today, here's what he's going to say, here's what they're going to say, and here's how you're going to react.
Okay.
So I'm skipping.
As long as they know how I'm going to react.
But we might touch on that in 2 weeks.
I think, honestly, I think 2 weeks from now, I think these next 2 weeks could actually be pretty interesting. Okay. So yeah, I'm kind of looking forward to maybe the next 2 weeks to a month. It's like, I think there'd be some more interesting discussions. Let's put it that way. So
I better take some notes before the next show. So, all right.
All right.
Well, first of all, listeners, thank you so much for joining us for this episode, number 67 of Taking Stock. And Art Jarvis, first and foremost, thank you for you joining me and sharing the insights about our global, national, local economy and how it impacts my wallet.
There you go. I enjoy it, and again, I've said it before. This is a very good exercise for me. So
great.
Yeah, enjoy it. Appreciate you. Thanks for doing it.
Thank you for being here. And this is Chuck Gibson, and that was Taking Stock, episode number 67.